Market recap for Thursday, the 4th of June, and Friday, the 5th of June, 2026. As you can tell from my voice, I'm kind of ill. And I want to mention from my last recap on Wednesday, I mentioned that the market is back into, how do we say it? It actually goes and hits targets, right? It's not scared of just staying in a range and, doing too many manipulations and stuff. Like it would do that. However, it would eventually hit the target, right? Um, what's the word? It's loose, right? It's back to I guess normal, where you can expect runs to be fast. You can expect to miss runs. It's not like it will offer that easy guaranteed entry. It's more of like a lower resistance liquidity on a higher time frame, if that makes any sense. So the lower time frame will kind of be the same. Even if it's a if it's a high resistance on the time frame, like if you're just looking at the structure in like the I don't know, 15 minute, 1 hour, 4 hour, whatever, it's more of a low resistance. I don't know how to explain that. Let me see if I can check the flow. So if we're looking at this a 4 hour, for example, look at this run up, right? We come down, we go up, down, up, down, up. Barely any gaps, a mini CB, just bunch of up and down, up and down, up and down, just to take this low. Like anybody would know beyond this, from this to here, that this target was this low, right? But look how it goes into it. And then once we go up, watch how we go up. Look how many candles share the range. Look at this basic for example. 1, 2, 3, 4 wicks into it. Yes, it's holding price, but look at the fashion that we're going up with. Again, right here. Again, one more all the way down into it again. And then up and up, and then just look at all of this consolidation. And then we have, well, I can't really show Tuesday. Tuesday running up. You can't really see it in the 4 hour, but in the 1 hour. And you can see the way that we're going down, all the block down, right? Here we had our retracement back just to take us the highs, going back to the same proportion block, and then running down, creating gaps, right? Having institution order flow into them, and then disappearing, right? And we went far today actually. I didn't check properly. But anyway, we're moving. That's all I'm saying. Rather than just this kind of garbage price action, we're actually having the black limousines are basically back in the market. Anyway, let's get to Thursday and Friday's price action. Let me get rid of this here. So for Thursday was interesting, right? Because if you are bullish, right? If you're bullish, and I've been calling these lows, I believe on Tuesday or Monday's recap, I can't remember. One of them. That the fact that we didn't go for them, I can't remember which day it is. It was Monday, it was Monday. The fact that we didn't go for them, we're specifically setting a stage where we're gonna come back to them later. And I thought it'll be closer to NFP, which we did it on Thursday, but more of like the AM session. That's what I thought. So I guess a session late. So anyway, we get into it and we visit this city. I mean BISI in the 4 hour, right? This is my main one on the hourly, but on the 4 hour it's basically this whole thing. Right? Sure. And I expected this to hold us and go up again for all-time highs, right? Because I don't, you don't want to guess the bomb. I can see these lows. These would be my targets in case this fails, but I know there will be a reaction here no matter what, and that's why we skyrocket all the way up to take out all these highs. So coming into Thursday, what did I think? Let's also show everything on the 4 hour. I believe if I take this off, there's gonna be way too much annotations. They're not organized, so I will just keep stuff in mind and just show you clearly what they are. So if you see this large gap, right, this is the 4 hour that I'm talking about. This is for Friday's price action. So Thursday's annotations are going to be missing, and there's going to be a lot. So if we just get to Thursday's price action, right, and I'll try clean it up, but there's a lot that I need to remember. This is the day before, so I don't really remember much. Coming into the market, we had this sweep. It's a mini sweep, right? It wasn't enough when I seen it, but it gives us a target of our initial liquidity for the buy side and our initial liquidity for the sell side, right? On top of that, there's these relative equal lows, this set and this set. So if we're gonna go down, if we're ever gonna have a reaction, we would have it below these relative equal lows, right? That's why we have it right here. And that's why when the market opens right here, when it dumps, it takes the sell side, but it doesn't take the main sell side that I'm looking at, right? In terms of buy side, and what did I think, right? There was two initial ideas. Either we're gonna come and just blast our way all the way to sell side, like this here, and then this would be ultimately a bullish day starting from New York. So it will be a Judah down, and then we'd have our bullish run up to the midpoint of our opening range gap here, or if we wanted to do the liquidity, really we'd go to London buy side, right? And that's what we want up to basically before dumping later in the PM session and carrying on in Asia. Okay, so that's what I was watching. I didn't care about this whole run. I just wanted either to get from this low to this high, guaranteed trade, or from this high to this low, guaranteed trade, right? Either of those would do fine. So market opens, and I believe if we look at the opening range gap, we had a large opening range gap, and let me just remember where it went to exactly. Yeah, that's what I remember. So it tapped the lower quadrant. It wasn't closing above it, and that's one of the main things to look at. It tapped the lower quadrant. It wasn't closing below it, and it was the midpoint of this range, right? So we went to discount of our range, lower quadrant, and this is a SIBI somewhere, 5 minute, 15 minute, whatever it is a SIBI, right? So that's enough. And in terms of that, we go up once, come down to the gap, go up again, come down, and that makes it a breaker block. And by now it's 9:40, so I'm allowed to trade. And remember this gap that I'm talking about? That's what was meant to act as the inversion fair value gap initially, right? I'm using it again here. The second that it goes into it, I sell short, basically trying to catch this breaker, the inversion fair value gap, and our, I guess, first presentation fair value gap as an inversion as well. All of that to liquidity. So I catch this move of 120 points. My fault is I didn't risk enough, right? I don't know why I didn't risk enough. And my TP was just this low to be safe because I expected, with the way that it was dropping, it was way too smooth that I just wanted it to just get to that low or just before it to the rejection block, and it just barely missed it. And I'm like, oh my god, I messed up the trade, right? So while it was going up, I closed it because at this point it could have, right? Essentially, if it SMT'd right here with ES, but it didn't do that. So I knew this low is still more likely, and I was just waiting for the second run, right? It goes up back to the inversion fair value gap, or if you're looking at it in terms of the first presented fair value gap, goes up, doesn't close above it, goes up again into it, and I'm just watching this wick. The second we close below this wick, I know that we entered the sell program. It goes back into this inversion, and now I take that trade to the low, right? And that's fine. And now I switch accounts because I knew right now we're gonna go up, right? And we're gonna go up to the midpoint of our opening range gap. Remember, the lower quadrant is here, the midpoint was here, and then because this again, this is a guaranteed trade again, right? So if it's guaranteed trade, I don't care. Like I'll take 2 trades in the day if it's different ideas. So I wanted to catch this order block, right? It doesn't offer it, and it creates this balanced price range. So once we create this balanced price range, I know there's just no way to get back into it once it goes above it here. So what am I trying to catch? I'm trying to catch the same order block, which now becomes basically a breaker block. So once it creates this gap with this breaker block, that's my entry right there. I enter, and because this is a second trade on the day with a different account, I put it instantly at break even because if we're really strong, we shouldn't come back to the entry point. I kind of got lucky. I didn't want to touch the midpoint. If it was my first trade for the day, I wouldn't. I would still leave the stop loss, let's say midpoint of this gap, right? Because it should not even come to this because this is a balanced price range, right? Anyway, I get lucky, and then after that, that's it. It's done deal. Once it gets above this inversion fair value gap or the first presented fair value gap, whatever, it's the same range, whatever way you're looking at, it's holding it, right? And specifically after this, I wouldn't really care about this inversion. Would be looking at the first presented, and you'll see that's what's getting used and respected here, and then price is just stalling until the macro, I'm guessing. 1050 right there, and you can see once 1050 comes, that's it. We actually get out the range, and once we get out the range, we're gonna be energetic, especially after we accumulate this long. Keep taking sell side once, twice, 3 times, and then it's time to go, right? And after we go, it's just an easy run all the way till the midpoint of the opening range gap. And this is the same CB that was holding us down. I would expect it to be used in this inversion for higher time frame. Yes, it was used here, but it's like something for once we spend time up, right? Think about like a 15-minute. Think about this like this would look as a 15-minute bullish fair value gap, and this will be the midpoint of it, and it would also come back to an inversion fair value gap. So it doesn't matter that you used it here, it will come back into it, and that, if you can see, is a market maker buy move, right? And this is the second stage, the unicorn, right? And that's why it just runs up so fast into the highs. So yeah, that's my trade. I just wanted to catch one leg. If I didn't catch it from this low here and I got my entry here, I probably would let it for London high or whatever. But yeah, that was the 2 trades for Thursday. 2 things that I didn't like that I did that day was what is it? That I didn't risk enough here, right? Now that the market is loose, I should be risking enough because I should be expecting that I wouldn't get second entries, right? If I enter, that's it, it's gone. Same here. I mean, I did do my entry, but I should have, rather than try to limit order on the breaker block, I should have just entered, on market, and I would have got a better fill and then enter again. So I guess I got a bit of hesitance problem with the market. So I don't know. Think about it as from the previous markets, right? From the previous days, it just kind of like cooked me to just be more wary and like hesitant and be selective with the entries, especially with shorts, right? Especially with shorts because it's so bullish that I don't know, man. I put some scars on. Anyway, now we're moving on to Friday, and as you can see, once we have this, right, this is the expected place for reversal. If that fails, well, then we're bearish 100%. So if we're bearish, then what are the next targets? Remember when I said if this fails, this 4 hour at the start of the video, what's the next target? These relative equal lows. And after these relative equal lows, it's the targets for previous week, which was the new weekly opening gap that we didn't fill. Anything after that for today, you're just greedy. I know that we dumped and we almost got this low, but this would be enough. And then if you're trying to target anything more than that, you're just greedy. That's all I'm saying. Anyway, so that's why I have these three lines marked. Why? Because this is this low from the relative equal lows, and I know after that it's just the new weekly opening gap close by it, so I wouldn't really care. I would expect my trade to be before it. This is the last 15 minute of hope, right? This is the last 15 minute busy. I didn't expect it to hold, but it was just holding us there for a second. So any closure below it and we're just gone. And as you can see, that's exactly what we've done. So I'm explain what all these lines are. So let me just get rid of previous days since we don't need anything to do with that. And let's explain today's price action. Just get rid of all this real quick. Alright, coming into Friday, right? It's not FOMC, it's NFP Friday. And I did expect it to go a certain way. Well, NFP was very uneventful, right? This is the NFP week. I expected, and this is normally what NFP does, it would have this and it would go up, right? So this is London, this is after London, right? This comes and clears out Asia high and I guess London high as well. So this is a prominent high and I did not expect it to be taken, right? Because look where it goes to. You see this little SIBI on the 1 minute? It fills it to the high and that's it. This whole range is balanced and this is part of that 4 hour inversion, right? So once we lost the midpoint here, look at this. I know price is just gonna stay in the lower half, right? That's it. We're done. There's no more going up, right? We've done enough in it, and now it has to act as an inversion for the value gap on the 4 hour. So I don't expect anything to go above it, and if there was anything that was gonna break any structure, if this high wasn't there, it would be this NFP going all the way up. 9:30 would open and would start the dump. However, we clearly didn't do that because we're so heavy. And then we leave the inversion fair value gap. One more tap into it, into near the lower quadrant. We don't hit the lower quadrant as of yet, but we do hit the lower quadrant on the 1 hour. And then we dump down. Anyway, the 15 minute, the last 15 minute, we touched the low of the busy right there on market open. So I'm waiting for the retracement, right? So you would delete everything before that range. You're just looking at this current range. So I'm eyeing this range visually, right? What's the midpoint of that range? Is this. And these are just minor buy side liquidity. This is one of the only days where you wouldn't look at data high, for example, right? Before stuff happens. Like I know data high or whatever, NFP high, FOMC, whatever the data is, right? Is an expected target or liquidity or whatever. But as you've seen coming into the market, that the higher time frame is so bearish, you should expect that momentum to be there unless it's proven otherwise. And that's why on the opening range gap, you need this marked, right? This will tell you how the market is going to open for today. So this is our current opening range gap, right? And you can see the quadrants and where this lines up. So if the market fails to get to the lower quadrant, you would not expect this data high, right? And you should be fine to not trying to target that because the higher time frame is bearish. This is against the data high is against our high time frame bearish idea. So what am I looking for? What are these two lines? Well, I need to look for the discount PD array in this area on a higher time frame. If I look at the hourly, we can see 2 wicks, this wick and this wick, right? 2 wicks like this create this range, which is just a gray pool. I don't know what ICT calls a gray pool. Anyway, this PD array is strong, and that's exactly where we go up to. Watch the bodies, right? We slam into the gray pool, right? If you're looking at it in the lower time frame structure or whatever, you can explain it whatever way. But anyway, we go to the gray pool, and I'm there thinking, all right, that's the high. This is our first presented fair value gap, and normally, even if the market is this weak, in the older market, we would come here to the rejection block, do some BS around here, offer this entry back into the first presented fair value gap, and then start doing the dump in a low resistance kind of fashion. We need to do like a bit of stalling. That's normal. But now that we're in this loose market, as you can see, once we've hit our discount, we're already gone. And that's what kind of pissed me because I was like, I don't want to chase price. I want to be careful. I want to. I have like two things in my head going around here. I can't trade before 940 per my rules, right? It's rules to protect me, so I'm just gonna have that. Throughout the next year, or throughout this year, I'm gonna transition into allowing myself to catch this short because if I was allowed to take a short today, I was going to take this short 100% and I would have rolled it all the way to here, right? That would have been my trade. However, I can't do that yet because I don't follow my rules. And if I don't follow my rules, then I know that I will do some trades prematurely and then just ruin the whole session before it even starts. And that was one of my problems that just kept me unprofitable. So I'm just not going to do that until I can fully trust myself into allowing myself to not trade before 940. But if you don't have that problem, you're welcome, right? You can take this trade. You can take it the second that we inverse this gap, right? And you can just take that or whatever way you want to take it, you can take it, right? Anyway, because I'm cautious, right? I'm waiting for the 940. And in the 940, this is what I was hoping for. We hit this rejection block and you start slamming all the way back up, making people think this is a Judas swing, and now we're gonna go higher to the data highs or whatever, and they will just slam it back down. But nah, the market doesn't have time to do all that, and because one of the important rules I'll give you, right? Because if you know in my trading that I will target specific liquidities and these would be session liquidities, so it'll be like this data high, it'll be the 7 a.m. high, it'll be like London highs taken and stuff like that. So whatever, you would know that just per liquidity rules, my bias is bullish. However, just because I know this kind of profile on Friday, that happens a lot, and the fact that we don't hit the lower quadrant, as long as we don't hit this lower quadrant, I'm bearish, right? I'm bearish no matter what throughout the whole day, right? It's not bearish for just like the start of the session. No, it's bearish throughout the whole day. And as you can see, damn, we were bearish for the whole day. And I, I will develop a model for this to hold for the whole day, right? Because this occurs maybe once every like month or 2-3 months, right? It occurs once. It's a rare occasion, but when it happens, you can get a very large extended day. It doesn't have to be Friday, it can be Thursday, it can be whatever, but it would be a very large extended day, and you will have many entries to get short. So Now that I know this type of model is going to occur, and like I said, that's why I drawn these targets. All these targets is on the hourly. You can see these relative equal lows on the regular trading hours. On the other time frame, I mean on the normal electronic hours, you can see these relative equal lows as well. So to not be greedy, I'm just seeking for the first one, and that's my target, right? So sadly, I missed this move, right, because of the thinking in my head. But we create this SIBI, and this would be the entry, right? And this is would be the entry that I would take next time. It's because I was just trying to be cautious, and I was like, you know what? Let me watch how this SIBI reacts. It goes straight institution order flow entry drill comes here, and I'm thinking like, should I enter on the old order block? And I'm like, you know what? It's already too far gone from my entry, is about to hit one of the targets that I guaranteedly expect. And after that, I said, you know what, I'll wait for 10 a.m. for the retracement and then catch the next move. However, once we go to 10 a.m., we already hit the first target, and I'm like, buddy, this is just annoying, right? This is so annoying. So I was like, you know what, I will have to catch, kind of breaking the rules, but like it's just knowing the model. I'm gonna catch the long because the long will be fast rather than catching the distribution short, because the second distribution leg is would basically be like this, right? It could go straight down or it could stall till basically the 1050 macro, right? As you can see, this is what we did. We stalled for the 1050 macro, and once we got to 1050, what we should have done is the SIBI should have acted as the inversion. I mean, the SIBI to take us down, but you can see we go above it. But this doesn't matter, right? Because once we hit time, right? Once we hit 1050, watch how this SIB is reacting, you know? And all these are like different time frames. I can't be able to explain right now. But just know that once we hit time, the SIBI offers it, and then you could have this easiest entry of your life right here and straight into TPs. And you could have probably held longer for the new weekly opening gap, because if we make, if we, how do I explain this? We could have easily came to this low, right? And then took this low. But we engineered lows, right? Making more relative equal lows, getting more people in, which means this is not gonna, the move is not gonna just end here. It's gonna be extended, right? It's gonna be extended, and you could just run projection from, I guess, this manipulation. Anyway, once this inversion fair value gap comes in, I take it and I let it rip to the midpoint, and that was my trade. So that was, I think my trade is here. That's my 100 points for the day, and I'm done. I'm out. That's it, right? Could I catch the short? Should I have catch the short? Probably. To the low. That would be a nice 200 points. But I was hesitant, right? And I need to fix that, because you know, like I said, it's just scar tissue from the previous ones that we had, especially in the war times, where I'm like, I'm in a perfect trade, someone is sick like this, and then we just see a stupid ass scandal to the first entry that I'm expecting, and then it goes, right? So I need to let that, you know, the hesitation leave me. And just looking at this recap, it's already about to hit 30 minutes, so, and I'm already tired, so I think I have to wrap it up for now. What do I think overall of the market, and where do I expect it to go? Like I said, I'm not too sure. Not yet. I can't make the judgment. I can't call this is the all-time high for this year or whatever. But this run, what I said, to me is fake, right? That's just to me, my personal opinion. I feel like it's fake, and I don't feel like this year is gonna be bullish. I would not be surprised at all if we come down and take this low, and this low, and end up somewhere here by the end of the year. I would not be surprised. I'm not saying I'm bearish now just because we had this crazy dump on Friday. But I'm just saying I would not be surprised. You're gonna have to take it a day by day, step by step, and if we genuinely lose daily and weekly structure, right? Which I wouldn't call it we're losing daily and weekly structure just yet, right? Just yet. If we lose this area, then yes. Because after losing this area, yes, it's a free fall down here, right? I would expect the same magnitude of speed going up, probably even faster going down, right? And that would be, I guess, the end of this bullish run market for now. But if we are still bullish, remember this would be just part of filling this gap. How do we fill this gap? I don't expect this dump just keep dumping, right? Because we're gonna need to come back to this new weekly opening gap. How do we fill this gap? We need to print one candle below it, right? And then one candle above it. So once that is done, then this volume imbalance is balanced, I guess, or whatever. And then you don't care about it. It's done. The deal with it is done. So don't just try spam shorts. Calm down, right? We've delivered way too much sell side. So for next week, I'll just be cautious. I will take delivery in both ways, sell side and buy side. But yeah, that's the market recap. I hope that made it insightful. I did talk about a lot, and yeah, if any of that helps, cool. If it don't, unlucky. Peace out.